Good morning, traders. Richard here, a quick Ichimoku Cloud Chart market review of the NASDAQ 100 Index Futures. The Metastock Reuters icon code is NQCV1 for the futures contract, the E-minis. Now, interestingly enough, uh, we're still stuck in a bearish state on a 4-hour Ichimoku cloud. Price action below the bottom in the cloud is bearish. So we see every time we get a bit of a relief rally from support levels, we run into trouble at the bottom in the cloud. Back here, found support at this old cloud chart support zone, then a relief rally back, only to be met with resistance at the bottom end of the cloud, as well as the standard line Ichimoku cloud. So we're back at these levels, retesting this cluster of support. It's a significant support zone. We can see that from the length of the bottom in the cloud here, as well as very close to the lows here. So there's some downside target, risk target at 24.5. These lows can still be tested as well as that low on the E-minis. Now, this cluster of support comes off the daily Ichimoku cloud. I'll show it to you in a minute. Now, if support holds here, we could see a bit of a relief rally back up to the front in the cloud charts resistance zone, as well as the standard line there. So that's the upside potential if support holds at this level. And when we get to that zone, we could then expect another bit of a correction as the market's retesting the significant support level. Now, if we take a look at the daily Ichimoku chart, on the daily, the top end of the cloud here is the support target here. So that's the first major zone. So we can see the futures is fighting there for support. The bottom end of the front end of the cloud, that zone, keep an eye on that 24,798 to 24,800. That's a critical support zone. So we could see if the futures rebound from here, then we could see a retest of the top end and bottom end of the front end of the cloud. So that these are the upside resistance targets as well as the standard line there. So I do expect a little bit of weakness to test that exact zone there. These lows here could still be tested right there at 24,690, that kind of zone on the future. That's the first kind of major support rebound swing trade potential of the futures with this top end cloud chart test. Now, there is still downside risk to the bottom end of the cloud, is this zone here on the daily Ichimoku cloud. So keep that in mind. There's still some downside risk to 24,328. But these two levels, the top end of the cloud there, as well as the bottom end of the cloud, their support zone, generally give nice swing trade opportunities for a potential rebound from these support zones back up to test the top end of the front end of the cloud. So those are those two levels to keep an eye on. So one swing trade from the top end of the cloud here. If we get a bit of more weakness there, we could see a swing trade from this low here, as well as those lows. And that's in between. Let's put those line in there. That's in between the low here, right at the bottom, below the bottom of the cloud, the bottom of the cloud there, 24,329, and that there. So there's a cluster of support targets here that could offer entry opportunities for a rebound relief rally. And then the upside target would be this cluster of resistance levels, the standard line there, as well as the top end of the front end of the cloud, those two levels there. So these are the upside targets if support holds at the bottom of the cloud when we get there, as well as a potential rebound from the top end of the cloud. And then the upside target first stop would be the turning line of the cloud, and then the standard line of the cloud, as well as the top end of the front end of the cloud. So these are the kind of levels, potential for two swing trades from the top end of the cloud, as well as when the market's further weak, the bottom end of the cloud can also offer a great swing trade opportunity. As long as the futures stay above this bottom end cloud chart support zone, the bull market on the daily Ichimoku cloud is intact. Any price action below here means the market is then moving into bearish territory. Now, the big picture risk we can see on the weekly Ichimoku cloud. The strong rally started in April, had a beautiful breakout past cloud chart resistance, nice strong rally, but now we're very far extended from the top end of the cloud. We look at the distance between the price action and the cloud chart support zone. So there is possibility for a bit of a technical retracement, of a Fibonacci retracement, back down to the standard line of the Ichimoku cloud. So there, keep in mind that there is downside risk to 23,904. 24,000 basically on that basis. So keep in mind that we're not out the woods yet. significant downside risk over the next couple of months towards the standard line of the Ichimoku cloud, simply because we're very far extended from the top in the cloud. And we get the mathematical mean reversion, as well as the potential for a Fibonacci retracement from this low to that high, and that could be the first Fibonacci level. Let's just take a look at what we can calculate. Picture perspective, popping that Fibonacci retracement level on here, you can see that standard line can level out pretty much at a 23.6 Fibonacci retracement zone. So that 26,279 is a major downside risk target if the current correction continues. But back to the a close eye for price interaction here on the at the top in the cloud chart support zone. Are we going to get that rebound there? So that's a critical swing trade entry point. And if that level fails, then the next level to watch out for is the bottom end of the front end of the cloud here. And that's also the key support zone to watch out for. And that corresponds well with these lows here, as well as that close there. So as another major support zone. So two major support zones, but two potential swing trades, one from the top in the cloud and the other one from the bottom in the cloud, with upside targets, the top end of the front end of the cloud. Remember, if we slice through the bottom of the cloud, yeah, all bets are off, basically, then we're in bearish territory on the NASDAQ futures. But so far, looking for potential relief Ferrari swing trade from these two levels in a orderly kind of correction. Yeah, so far the market's experiencing a good orderly correction from these levels. I think that level, let's just look at from that high there to here, is about top in the cloud is about 6%, and that's 7.8% down to that zone. So that's the downside risk. About another 1 or 2% to go for this correction to complete in and around these cloud chart support levels. Thank you for watching. Until next time, happy cloud chart trading. Bye for now.